Commodity markets, they recorded a net inflow of $450 million over the past 3 weeks. That's the second largest monthly inflow into commodities seen this year. This is as traders, they rush to capitalize on the biggest macro themes driving the markets right now. Everything from the disruptive impacts of climate change to escalating global food crisis to Saudi Arabia's aggressive policy aimed at keeping oil prices high. And just in case that wasn't enough, traders are now on the verge of being gifted even more lucrative money-making opportunities with the return of the global energy crisis 2.0, which has flared up again across European natural gas prices, spiking to levels not seen since last summer, all topped off with China's growing economic uncertainties, which could spark another global financial crisis, boosting demand for safe havens. This cocktail of events is whipping up an explosive money-making storm, sending commodities across the board from agriculture to energies back to new record highs. One of the biggest market moving themes of the current financial climate that needs no introduction is the Fed's next interest rate decision, which means all eyes this week, they will be on the Federal Reserve's annual Jackson Hole Economic Symposium. Minutes from the FOMC July monetary policy meeting, they showed that most Fed officials, they continue to see significant upside risk to inflation. The minutes they signaled almost all policymakers, they're leaning to the view that there's going to be long-term inflation pressures despite recent progress. Now, broader economic shifts, they're also driving speculation that inflation is going to be sticky and may remain stubbornly above the Fed's 2% target for much longer than initially anticipated. Some of these factors, they include demographics that may push up wages as aging workers, they retire, a shift away from globalization as BRICS nations, they make advanced progress in creating their own microeconomy, and the disruptive effects of climate change on agriculture and global initiative to combat global warming by shifting away from fossil fuels. Almost all, if not every one of these inflationary factors, they remain outside the Fed's control, and that's a real underlying concern for the economy. Historically, since the 1920s, there's always been 3 waves of inflation. According to economists, the uptick in agriculture and energy prices, it is a very reliable indicator that inflation is heading back up in the fourth quarter of the year. In other words, a second wave of inflation on the way. In an ideal world, to get inflation down to the Fed's 2% target, oil prices, they would need to fall below $60 a barrel and stay there. But unfortunately, with Saudi Arabia's aggressive policy aimed at keeping oil prices high, $80 a barrel appears to be the new floor for the market. And of course, a return to the global energy crisis 2.0, which has flared up again after the European natural gas prices, they spiked to levels not seen since last summer, and that is also easing hopes of inflation cooling in the near future. Now, this month, European natural gas prices, they've been on an unstoppable run, soaring over 50% in a single day alone. That's the European benchmark's biggest daily percentage gain since Russia's invasion of Ukraine. That bullish momentum, it also spilled over into US natural gas prices. Right now, the summer spike in natural gas prices on both sides of the Atlantic, that has been driven by high demand as scorching heat wave temperatures around the world due to the effects of global warming, they force businesses and households to crank up air conditioning. Natural gas prices, they're currently 4.5 times higher than they usually are for this time of year. And we haven't even entered the winter months yet when prices will typically surge even higher. Whilst energy prices, they're grabbing all the headline news right now, one of the best kept secrets in the commodity sector that nobody is paying attention to, that is agriculture. The disruptive effects of global warming and climate change, combined with unprecedented demand for safety, diversification, and high returns on offer in this new economic landscape, they have sent agricultural commodities from orange juice to coffee to sugar to corn to wheat to cocoa to soybeans and rice prices skyrocketing to all-time record highs. Orange juice prices have quadrupled and setting new record highs. Elsewhere, cocoa prices, they've risen 400%, while sugar prices, they've racked up phenomenal gains of 450%. During the previous commodity supercycle in the early 2000s, agricultural prices, they posted a whopping gain of 4,000%, within a 10-year stretch. So if history is anything to go by, this rally is only just getting started. As traders know, there is a strong correlation between commodities and inflation. When commodity prices accelerate at a red-hot pace, so does inflation. Given the possibility of an uptick in inflation this year, the big question now is, will the Fed skip, pause, or hike interest rates in September? The answer to this burning question may come from Fed Chair Jerome Powell's hotly anticipated speech at the Federal Reserve's annual Jackson Hole Symposium. As always, it's expected that Fed policymakers they will use this event as a platform to signal their next big move. Also this year, the BRICS group of nations who plan to launch a new gold-backed currency, they will also join the conference, positioning this event as one of the biggest market-moving events of 2023, which traders will not want to miss out on. Whichever way you look at it, one thing is clear. The current macroeconomic backdrop that is fueling one of the greatest wealth transfers of our lifetime, and it's presenting savvy traders with back-to-back money-making opportunities. As we transition through 2023, we are in one of the greatest eras of wealth creation the world has seen. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a secondary replacement income, or just to earn a better return on your savings, now is the time to take action. Banks, hedge funds, they're making multi-billions capitalizing on the week-to-week macro-driven opportunities, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures so far this year, and we still have another 5 months left to go. If you've been kicking yourself for missing out on some of the biggest trading events so far this year, and you still want to make 2023 your best year yet, then you still have time. Go to jointhegoldandsilverclub.com to learn how our mentorship program can take your trading to the next level. Investing in yourself, it is the best investment you will ever make. Your future, it is created by what you do today, so make investing in yourself a priority because nobody else is going to do it for you. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So firstly, as we identified with you last week, great buy opportunities last week on platinum, back at $900 per ounce or lower. So currently we've got platinum, it broke out 2% on Thursday through to Friday. It's trading back at $914 per ounce. So this is a position that we've built into alongside platinum, palladium. Every retest back down towards 1200 or lower is also providing fantastic opportunities. So currently that trade, it's up 600 points. You can see again over Thursday and Friday, we've had yet again another retest back down towards 1200, which got supported, and a lovely slingshot move higher, impulse move over Thursday and Friday. Now, one which you definitely want to have on the radar right now is gold. There has been a huge trimming of hedge fund and money manager positions in the last week where many got liquidated that had been bag holding above the May highs here when gold broke out to 2060 US dollars per ounce. So at that point, this is where we saw many speculators, hedge funds, they bought in over 80% at that point went long. Now, as a result of the recent data here, less than 50% remain long after this significant sell-off that we've seen over the last few weeks here, which for me, this is perfect because this is the same rinse repeat cycle that happens time and time again. You've got hedge funds here using their momentum-based strategies to buy too high. They then get liquidated on the pressure to the downside. Once they've been liquidated, then this is where gold can typically make its move. So right now we have gold trading at $1,889 per ounce. I like gold at these levels or lower, certainly as we go into the BRICS Nations Summit this week, where they're going to be discussing, amongst other things, a gold-backed digital currency. And of course, you have the Jackson Hole Symposium later on this week. I'm expecting gold to be the laggard here. So essentially, I'm looking for silver, platinum, and palladium to lead. Now, silver had a lovely breakout last week, managed to sniper in on this position. So that's moved nicely into profit into Monday. We had, again, impulse move over Thursday, Friday, and into Monday as well. So we're back essentially around $22.80 per ounce here. So I'm essentially looking for a move back towards the swing highs here in the coming weeks. And again, the catalyst for this, you've got BRICS Nations Summit over this week, Tuesday, Wednesday, Thursday, and then later in the week, you've got the Jackson Hole Symposium as well. So this overall playbook that we discussed with you, it's all worked out really nicely. With platinum, great buy opportunity at $900 per ounce or lower. Palladium equally $1,200 US dollars per ounce or lower. Again, I do like gold at these levels, $1,889 per ounce or lower. Then alongside that, we've also got the dollar, which is starting to show signs of pulling back here as we start off the week, which is perfect timing as we do get closer to the Jackson Hole Symposium. You've got a perfect rising wedge price structure here, which could easily start to break down in the coming days. As you know, we're long the dollar from 99.67. So this is a position that has performed very well over the month of August so far. And of course, we're currently up over 300 points on that trade. However, I am still expecting a rollover. We have made sure to lock in profits and bank into strength as we've seen an acceleration back towards the 103.50 zone. But I would look out for the potential of the dollar to start pulling back as we head into the remainder of this week. And then moving over to energy. So as you would imagine, we've seen a 500-point breakdown, exactly as we stated with you previously. Expectation after 3 drives back into liquidity here. So essentially what we've seen is many traders, they start to get triggered at the highs there, utilizing momentum-based strategies to buy it too high. And then what happened, exactly as we mentioned to you, 500-point breakdown in price. Now, as you would imagine, all of our sell shorts, they have been protected. They remain in profit here, but at the same time, if we were to see risk on over this week, those trades, they are completely now protected. We've been selling from higher prices here, and everything we expected to happen has played out. We've seen over a 500-point breakdown to the downside in the last week. So again, we have an action-packed week ahead. And of course, whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second replacement income, or just to earn a better return on your savings, now is the time to take action to give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7 and 8 figure returns in these markets right now, then you need to utilize a professional research driven approach, or you'll just end up wasting lots of time, money and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis, outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already stacked up massively against you. If you want to change your results, then you have to change your thinking. If you want to learn our exclusive research-driven approach that is never taught to retail traders and only reserved for professional traders in banks, hedge funds with access to powerful game-changing insights, including where the banks and hedge funds where they're buying in real time, the key liquidity zones, so you can enter and exit the markets with pinpoint precision, alongside the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycles, and intermarket correlations, you need to join our mentorship program. We are in one of the greatest eras of wealth creation the world has seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, then there's no better time than now. If you want to upgrade your income, then you need to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP.